All right, Real Estate Talk Podcast, Season 2. Welcome to the next episode, guys. We're going to talk about a few different things. CPI, homes.com, and a little market update in Southeastern Virginia. Stay tuned as we get into this. Hey, everybody. Welcome back to a Real Estate Talk Podcast. Rob Kyleman.
Joshua Britt.
All right, guys. We're going to get into some interesting data that came out. One being the CPI, Consumer Price Index, talk a little bit about inflation. We're going to move into homes.com, some little interesting things happening over there. And we're going to go ahead and cap it off with a local market update. So we'll just get right into it. So CNBC reports inflation falls 0.1% in June from prior month, helping case for lower interest rates. The CPI, a broad measure of cost for goods and services, declined 0.1% for May, putting the 12-month rate at 3%, around its lowest level in more than 3 years. Excluding volatile food and energy costs, the so-called core CPI increased 0.1% monthly and 3.3% from a year ago. The annual increase for the core rate was the smallest since April 2021. A 3.8 slide in gasoline prices held back inflation for the month, offsetting 0.2% increases in both food prices and shelter. Now, for everybody at home, if you're just tuning into us for the first time, why do we cover the Consumer Price Index? Well, this affects how people can spend money. How can they buy houses, get loans, and afford their mortgage payments, cars. So inflation really matters, interest rates as well as home affordability. So curious, I know you read that CPI data, in what do you think? What are your thoughts on that? I don't think 0.1% is enough to do anything with.
Well, it is. It is in the sense that you would rather a negative than a positive, and you would rather a negative than just a zero, like we're just continuing the trend, right? In order for the feds to get to a point of saying, hey, it is okay to start lowering interest rates, this is the type of data we need. This is the type of stuff that will fuel the fire for the calls for the feds to lower the interest rates. So this information is being welcomed by everyone who's listening, right?
Yeah.
Now, there's more to it than just those numbers, right? Just the headline being a negative 0.01. Because what you have to do is when you talk from a home buying perspective, if you're potentially looking to purchase a house or if you're looking to potentially rent a property, there is a shelter inflation number that's in there as well. So the shelter index actually increased by 0.2% in June.
Increase in prices.
And that was both in rent and in mortgages, which the owner's equivalent rent increased by 0.3%. So while a 0.3% may not sound like much, you have to keep in mind that this is 0.3 on top of already numbers that have already been built up since COVID. So each month, this is where when we talk and we say, hey, a person's inaction to say, hey, I'm going to purchase a home now, vice waiting, their inaction is costing them more because the price of homes continue to go up. Yeah. And that continues to compound, right? And on a smaller scale, right, if a home buyer was shopping for a home and they were getting an interest rate of 6.5%, but now all of a sudden they could get a 6.25%, well, their interest has gone down by 0.25%, but the interest rate or the inflation of homes has gone up by 0.3%. So the cost of the house has gone up by 0.3, and now you're saving 0.25% on your interest. That's not necessarily a good thing. The cost went up by 0.3, even though you save 0.25 on the rate.
It could end up costing you more money. Even though you have a lower payment, you'll end up paying higher, so you'll probably end up paying around the same, if not more.
Exactly.
It depends on what data number you are fixed to. I would look at more so the home prices because interest rates always fall. But once you buy the house, you're paying what you paid for it isn't going to fall.
There you go.
Now, I will say that CNBC went on to report that the monthly inflation rate dipped in June for the first time in more than 4 years, providing further cover for the Federal Reserve to start lowering interest rates later this year.
Yes.
Now, they've been talking about lowering the interest rates since the beginning of this year. We covered that in previous podcasts, but and at that time, I think somewhere around January, February timeframe when we reported, we were supposed to have up to 3 interest rate cuts in 2024. Interest rate one didn't come in Q2 or Q1, and now we're in the middle of the summer. No interest rate cuts expected now. Even with this new data come out, it could come in the fall, September, October timeframe. But we've heard this story before, that they're going to lower their interest rates based on the inflation target that they're talking about. We don't have any certainty we're going to see another interest rate drop. So this isn't going to be necessarily welcome news for homeowners or home sellers or home buyers, because it's been promised before and not delivered.
Correct. And, we've been covering this for a long time, but even last year when we were talking about this and the announcement was made back in December, I always said I never seen an interest rate cut happening before the fall. And the reason why is this summer time is the time when most Americans are spending the most amount of money. Their kids are out of school. They're going on vacations. They're taking trips, in which we've even seen, even though the CPI data says that gasoline prices fell by 2.5%. And energy index across the board is down by 2%. If you go to get gasoline right now, you'll probably find that gasoline right now in July is actually a little bit more than what it was in June. The reason why is because consumers are out traveling, they're using up a lot more gasoline, and so therefore they mark up the prices on it. When inventory goes down of gasoline, the price goes up. And so what you're seeing is this higher prices now here in July for gasoline than you had in June, even though this data that's from June says that the prices went down. Why that's important is because even though we have this negative reading right here in June, for June, next month, we're going to get July's data. And if July says, the inflation went up, well, then this June is just a blip on the radar. And so therefore, no, we're probably going to have to hold. So right now, the markets are pricing in at a 0.75% chance that the feds are going to they're going to cut rates in September. But if next month in August, when July's data is read, if it shows that the numbers went back up, that inflation crept up over June's data, then September, a rate cut is not going to happen. So we're really playing, seesaw here. We could see it go down and up, down and up, down and up, but it needs to stay down for the long haul. And, getting a negative 0.01 is welcome, but it's going to need to come with another -1 or -2 or at least a 0. No one's going to want to see it go back up.
Yeah, because another part that affects a lot of things is the employment data, and it's virtually nothing burger at this point. There's not much change in the labor market to indicate a stronger case for interest rates to be cut. So I don't, even with this 0.1%, I don't want to get excited about it, because more than likely they're not going to cut. Something's going to happen. The next round of reports to come out, job numbers came roaring in somewhere. And if anything, we got to raise interest rates again. So I don't see that happening, just based on what they've said before. They promised us 3, or not necessarily promised, but they planned for 3, didn't happen. Now, one interest rate cut. There's cases being made in the data that indicate that these are strong signals that could push for lower interest rate, get the Fed chairman to, kowtow and say, okay, yeah, I'll lower it by, whatever. But even if he does lower the interest rates, I don't see it being lowered by any more than 0.25% or something small like that.
Yeah, it's going to be a quarter point cut, most likely, and it is most likely not going to be felt by your average person. So, and the reason why is because even, for most Americans, we feel things like food prices, energy prices. Food prices are up, that they're up. If gas prices are up, that they're up, right? You're feeling those things. You're feeling the effects of it either in the grocery store or at the gas pump. Those are the things that we feel most. When you look at those indexes on food for the month of June increased by 0.2%. If the feds take a quarter point cut, it's not going to feel that as much as you will when you go to the grocery store to buy food. Same thing with gasoline. So it's not going to be that big of a feel for Americans. It's going to take many months of cutting. Remember, the feds increase rates 11 times.
Yeah.
One cut is not going to equal 11 increases.
No, because if it boils down to a mortgage payment, what's a quarter point after every, at the federal funds rate? And then once it gets down to the lenders, what they're charging you, mortgage lenders, what are you saving? Under $50 a month, I would say.
Easy. And the other thing is just because the feds cut rates a quarter point doesn't mean the lender is going to equal the same as what the lender is going to give you.
No, because the lenders don't necessarily have to do that. If anything, they will keep the rates where they're at.
Yes.
To maybe pad their profits just a smidge.
Yes.
But it's not exciting enough where they need to outcompete other lenders at that point with a quarter point. I don't see that. Possibly, I don't know. I don't control the interest rates with lenders.
Yeah, it's going to be long. It's going to be a long cycle of cuts coming before you see it. And even when we did our interest rate predictions, you were a little bit more optimistic.
I was
about
bullish as hell.
Yes.
I thought we were going to get into the fives quicker.
And so, we're right there. At any moment we could end the year on a high note of a mid to high five. But it's going to take consistent data showing that inflation is coming down before the Fed start cutting. And, it's going to be a wait and see type thing.
See, I don't want, this is my opinion, but I don't want interest rates to drop into the fives with a low inventory market. And this goes back to what I was talking about before. And I'm echoing a lot of other real estate professionals out there when they said that. So with a low inventory market, and you have a certain number of buyers, it's already competitive. You drop that interest rate to make it more affordable for more buyers, what's going to happen to the home prices?
Go up.
They're going to go up because supply and demand factor applies. And I don't know if lower interest rates would be a welcome size without a surge in inventory. But as we have covered and read about on our own, there's not every market in the United States are having an inventory problem.
That's true.
So it's a spotty at best, and depending upon where you're at, this news is going to be either welcome or won't make a difference. So,
yeah. But the other key thing here is like I said, is that even though inflation on everything seems to be going down, the shelter cost is still going up. It's still increasing.
Rent, mortgages, still going up.
It's even with elevated interest rates, even going back in October of last year when interest rates were 8%, people were still buying homes. Buying a home and shelter is a necessity. So therefore, those are things that people are always going to buy. It's a necessity. So, whether the interest rates go up, down, or stay sideways, it's not going to make a difference. People are still going to buy and sell homes. It's just a matter of how much.
Well, let's move on to the next topic, unless you have any more to add on that.
No.
Yeah, okay, cool. We beat that one up. Guys, unfortunately, that's neither welcome or unwelcome news, so we're not going to see much giveaway in the real estate market with that 0.1%. Anyway, CoStar. Okay, CoStar is the parent company of Homes.com. Okay, CoStar also purchased HomeSnap. Now, some consumers may have heard of HomeSnap. It was a nifty little app to help search for homes and incorporates your agent in it too. So it was a nice little streamlined process. But HomeSnap sold out to CoStar, and now they own them. So anyway, CoStar, they just got censured for claims made about the traffic in Homes.com ads. So CoStar Group has compiled with a request by the Better Business Bureau, National Programs, National Advertising Division. Oh, that was such a mouthful. To seize claims and ads that its residential portal has doubled the traffic of Realtor.com. So the National Advertising Division, an arm of the Better Business Bureau's national programs, delivered a blow to Homes.com Tuesday, recommending the portal giant halt use of two key traffic claims in its advertising due to a challenge filed by Realtor.com, parent company, also called Move Incorporated. Move challenges Homes.com's claims that it has reached 156 million unique monthly visitors to its site and has double the unique monthly visitors of Realtor.com. This echoed Move leadership's previous arguments that both statistics are based on Homes.com network and not the Homes.com website alone, which boasts 110 million unique monthly visitors, a fact that is disclosed in small print on Homes.com ads. The National Advertising Division agreed that Move's concerns, saying that both claims are not supported based on Homes.com's publicly shared data statistics. As a result, the portal must stop using Homes.com just reached 156 million unique monthly visitors. And Homes.com now has doubled Realtor.com's traffic in its ads. So they can't say those things no more. They don't want them to say that. NAD recommended that those claims be discontinued because the claims conveyed a message that Homes.com attracts 156 million monthly unique visitors, and that figure was based on combined total traffic calculated using Google Analytics for 16 other CoStar websites. The NAD said in a press release, according to Google Analytics, Homes.com itself has 110 million monthly unique visitors. So they were using some puffery in their stats to sell ads.
Yeah, no. What they were trying to do was sell real estate agents.
Okay, ads to real estate agents.
Yeah, they were looking to get real estate agents to buy subscription services to their platform, at which, when you had a listing, their ad campaign to real estate agents, which the public may not know, is your listing, your lead. Meaning this: buyer or home shopper goes to Zillow.com. If I have it listed and they see a house that they like and they click the button to say request more information, that home buyer could get directed to you, even though I'm the listing agent. Right? Yeah. And you end up taking that person out. You show them the house. You sell them the house. Great. You sold them the house. I sold the house. We sold the house. The house is gone. Right?
Yeah.
Now, Homes.com wanted to play on this because they know that a lot of real estate agents don't like the fact that it's my listing, but Zillow sells it, gives the buyer to you, and then you sell the house. So they're trying to position themselves for real estate agents who are heavy listing agents to get on their subscription service, because when a home buyer shops on their website, if I am a paying subscribing member and somebody requests more information, they give that home buyer to me. The thought process is if they give the home buyer to me, then I could work both sides of the table at representing the buyer and the seller, and I could make double commission. Now, they think that entices a lot of real estate agents. So it was a strategic play for them to say, hey, we're going to give you the leads that are generated on your own listing, so that way that you can potentially work the both angles and get paid twice. And some agents are shelling out money for this, right? They're paying for it. But they need to drive the traffic to the website as well. So they've created all these, I think it was multi-million, could have equaled $1 billion. One of their things is they spent $1 billion in advertising to get people onto Homes.com. But during the Super Bowl, CoStar, Homes.com had several ads in there, and they've paid high-end celebrities, well, what some people would say higher-end celebrities, I don't think they are, but If anybody's watched Schitt's Creek, one of the actors in that famous series is one of the main actors in a lot of the commercials that CoStar has.
I don't know.
So, but it is really more than anything. They use the numbers to try to get a lot of real estate agents off of Realtor.com and move them over to Homes.com, because if they can get them on Homes.com, then it puts them in a better position to compete against Zillow. Not once they're able to say that they have more traffic than Realtor.com. Like, Realtor.com is like the little brother in this, right? You beat up the little brother, and then you get the big brother, which is Zillow.com, right? So then they go and try to compete against Zillow.
So I never had the marketing conversation with Homes.com, the pitch, if you will, to get you to spend thousands for their leads. So curious, out of all that time, they said you're listing your leads. I mean, if it's a really hot house, I mean, you can get 50 phone calls on that. So you get 50 leads?
Yes.
You do?
Yep.
Do you pay per lead? Or
no, you don't pay per lead. You don't do any of that. It's literally as long as they're not already. So let's say you had a listing that went up first.
Yeah.
Home buyer comes to yours and that person is sent to you. They come to my listing afterwards. I don't get that person. They won't send them to me because they're already sent to you. So it's semi-exclusive, if you will.
So it's not completely exclusive.
But because that person will also see my phone number, my name, they'll know all my information. So if they're really smart, they'll just go to Google, type in my name, and just try to call me directly.
So okay, you pay one monthly fee and you get unlimited calls to your listing?
Yes, potentially.
Okay.
Yeah, anybody who comes in there and clicks on it says they want information about your listing. Yes.
It's not a bad idea.
It's not a bad idea for some people, However, I think that
depends on what it costs.
It is all about what it costs, and then it's also about the follow through from Homes.com. They historically, pre-CoStar ownership, they historically have been like, a very low end lead generation platform.
Okay.
CoStar bought them out mainly because of the website name, Homes.com. Like, they think that should be the brand name that people go to when they're thinking about buying homes, and not Zillow. And so CoStar is a big conglomerate. They own Apartments.com as well, so they wanted Homes.com. So they bought up the website, the company that was running it, and now they own it, and so now they have to do something with it. Their play is to get home shoppers on their website so that way that they can justify charging the amount of money that they charge for agents who list homes, predominantly listing agents, to pay subscription services so that way that the leads are sent to the listing agents.
Well, I don't. The fact that they're puffing, I would allegedly, let me say allegedly puffing the numbers, because if Realtor.com does in fact have more monthly unique visitors to their platform, how does Homes.com rank if they're going to be Zillow challengers? Because if they're not even keeping up with Realtor.com, how the hell are they going to challenge Zillow for the throne?
Yeah, look, they may have had one good month after all of the Super Bowl commercials. People started going there and checking out, and then all of a sudden it's like, we have more traffic than Realtor.com. But is it sustained traffic? Did you just have one good month because you ran a bunch of Super Bowl ads and people were like, well, what does this Homes.com have to offer, right? Anything that you say, people will research it out of curiosity, right? So, no matter what brand name we come up with, if we say something, people will go look it up out of curiosity. That's what happened, in my opinion. They ran a bunch of Super Bowl commercial ads that nobody really knew who Homes.com was. And so people went there, started checking it out, like, oh, this Homes.com, okay, yep. So they got an inflation in the number of visitors to their website. And then now they've started making claims that they have more traffic than Realtor.com, but it was short-lived.
Well, good luck, Homes.com. Let's see if you guys are able to challenge Zillow the next 10, 20 years. because I don't think that's going to happen compared to what Zillow's going on. But I'm not an expert on homes.com. That's why I figured I'd ask you that question. And we in general aren't necessarily experts in every single real estate market. That's what we hope to have some more guests on the show in the future. We have actually a request for a lot of different people to come on here to interview, and we will get to that as we were improving our capabilities on the podcast. But what we are experts in is our local real estate market. I know, and we're operating out of Southeastern Virginia. I know some juicy data came out. What did you see on that?
Yeah, so just based off of June's numbers, we've seen a 30% increase in listings over last year. So that means that if you're a home buyer and you're out there shopping right now, you're seeing a lot more houses than you would have seen last year. That's a good thing. It gives you a lot more opportunity if you're a home buyer. If you're a home seller, this is a point of concern for you. There's more opportunity. There's more houses out there. So you don't necessarily have the same leverage that you would have had a year ago. Okay?
Yeah.
So you have to take that into consideration. You have to take it into consideration when you're hiring whoever it is that's going to list your property for you, what they're going to bring to the table and skill sets and negotiation and things of that nature. And, their insight on what the market is doing. If you just list a house, doesn't mean it's going to sell just because it's listed. You have to be actively marketing that house or it will sit.
Yeah.
The other information is 7.5% decrease on pending sales. That means that there's fewer buyers out there buying. So we're seeing a reduction in the number of sales that have happened. And that was pending. And settled sales has dropped almost 12%.
Now, that is kind of alarming to me, being in the middle of the summer, because this is supposed to be...
This is the height.
This is supposed to be scorching hot right now. We're supposed to see numbers really inflated. We're supposed to see a lot of different movement happening around the middle of the summer. And it looks like it's decreasing.
Yes.
And this is welcome news that we have more listings on the market for home buyers.
Yes.
Because they have more to choose. However, I talk a lot, talking with some people that are potential home buyers and, having the little phone call meetings with them or, in-person meetings. And one of the biggest complaints that I'm seeing, especially in certain price points, is that I just can't find anything. Even with more inventory, we still got those higher prices, because of inflation and, post-pandemic and stuff. And I honestly can't tell them if it's going to ever come down to the level where they'd like to see it and be more affordable for them. But there might be another thing is a lot of home sellers, like, if we look at over the past few years, they didn't have to do a lot to their houses in order to sell it. They didn't have to make repairs to HVACs, or they didn't have to make any costly repairs, because really, throw your house on the market, and if it goes highest and best, likely there's going to be one buyer in there that's tired of bidding on houses, and they'll just waive the home inspection anyway.
Yep.
So
that's why all of this is welcomed information for home buyers, right? Yeah. And if you're out there, you're looking at buying, and you're in the Southeast Virginia market, and again, this information is not national. This is local information, but check with a local real estate agent if you're not in this market. There's a good chance that there's similar situations going on in your current market, but more houses, fewer sales means that you don't have to jump on something right now today. You can take time, look at a house, look at a few of them, and it's like, there was nothing that really just jumped right out at me and said, this is it. You go out another day or a couple more times and see what's out there. You have time to shop.
Yeah. May not be as much of a sense of urgency as it was in the past.
Yes. Now, on what was interesting to me, though, in this same report, new construction home sales were up 10%.
So you got a lot more new constructions sitting on the market.
Not that
sitting. Well, what about the starts, though?
So it doesn't talk about the starts. Okay. But what it talks about is new construction home sales are up almost 10%, right? It was 9.73%.
So they're up.
But the thing that was the most interesting about it is right here in our own local market, and you know this, we've been seeing a lot more listings where the seller's not offering a commission.
Yeah.
Or they're offering 1%, or they're offering 0.5%, or 1.5%. Well, you know what's happening? In my theory, this is my theory.
Yeah.
If the agents who have the buyers, they know the builders are already geared. They're paying the 3%. Some builders are paying bonuses for you to bring them in.
Yeah, no shit.
So the buyers,
saw the emails on that.
Yeah, $5,000 buyer agent bonus. So it's like, oh, I get 3% plus 5,000 on top. Great. Why muddle around and look around all the listings that are at 1% or 0%? You may see a surge in activity in just new construction, because once the MLS says, or once the lawsuits are settled and they violate people's First Amendment right, which is freedom of speech, if you're telling a seller they cannot advertise if they're given a commission, my opinion is you are violating their First Amendment right, freedom of speech. They should be able to say if they're offering a commission or not. But if they're going to put out a blanket statement and say, hey, we're not going to allow people to advertise whether or not they're given a commission, you could potentially see a lot of new construction home sales be the path forward for most buyers, because buyer agents know that the builders are still going to pay commission.
Yeah.
That's it.
Most anyway.
Yeah. I mean, you're gonna have the Ryan Holmes people who give you $500, pat on the back, thank you for bringing people by. But most real builders, the people who are building good quality homes, they're gonna pay a buyer's agent commission, because they know that the buyer's agent is the face of the transaction, and so they're gonna say, hey, we want the highest probability of selling a home, and so therefore we're going to pay that buyer's agent.
Well,
that's it.
And if you want to look at Ryan Holmes as an example, because they are a big conglomerate, I don't have much of an opinion to them, but I know there's a lot of other people that have. And check out my video that we did on Ryan Holmes. We'll link that at the end of the video. You could see what consumers are rating their Ryan Holmes at.
All right. Now, in wrapping up, just go over some quick numbers here in Hampton Roads. This week, in the last 7 days, we've had 827 new homes listed for sale, or not new construction, like new listings, right? These are homeowners, builders, investors that have put their houses on the market. 827, highest of the year, right? In the last 7 days, we've had only 505 sold, meaning only 505 have went under contract, went through the process, and actually closed. So we're getting to a point of where the new construction or the new listings are well and above the amount that we're taking off the market. This is how you build inventory. So we're almost at a point of, we're probably about a 40% differential in the number of homes that are being listed and the number of homes that are actually selling. So the inventory is going to increase over time.
Inventory is a good thing.
Inventory is a good thing for buyers, not for sellers.
No,
if you're selling a house,
it's terrible.
An increase in inventory is not good for you. It means that you need to strategically, not just you, but you and your agent should be strategically looking at all of the other houses that are on the market around your house and making price adjustments accordingly. And so, therefore, if you're currently listed at a price and it's not selling, but you or your agent looks and sees that another house came on the market less than yours, you need to be considering whether or not you're going to reduce your price in order to fall in line with them. If their house is a superior house to you, and you have to be honest with yourself, if your house is inferior than that house, you need to go ahead and take that reduction, because if you don't, you will lose out in the long run.
Yeah, I would also add to that, and not only look at your competition of who you're selling against, but when you run the comps to figure out what's the value of your property, if you're taking comps from 6 months ago into consideration for your new value, you might have to look at it again, because if we get more inventory on the market, you have more for a buyer to choose from. So how do you make your house more shiny object? If it doesn't have all the turnkey stuff in it, you got to look at and be honest with yourself how you're going to price it. Are you going to price it like, let's go for the gold, let's go for the moon? Well, if you got a lot of other houses like yours, you might not want to do that because you might be in 30, 60 days from now, start walking that price down. And then if your house is on the market 30, 60, 90 days, some buyers are going to look at it and say, well, why has it been on the market so long? What's wrong with the house?
Yep.
Yeah.
And so the other number I want to point out here real quick before we wrap it up is we've had in the last 7 days 463 price decreases. So 463 price decreases. Not that they listed too high. It's just that whenever you start looking at the houses, people are looking. So again,
they listed too high without knowing it, because if there's more inventory to choose from, somebody had a better deal in there.
Well, yep. But we also price houses at what the last buyer paid for it, right? So when we look at comps, we say, okay, well, the last buyer bought this house at this much money. Well, if buyers aren't buying at that price point anymore in that area and your house is sitting, well, you got to start coming down to entice a buyer to buy your house at that price.
Well, they should be looking at this data to try to make
That's what your agent should be doing. Your agent should be looking at that data saying, hey, listen, hold on a second, something's off. We've been on the market too long. Our price hasn't changed. More houses have come on the market at lower prices than ours. We got to cut. We got to get low.
Yeah.
That's it. If you don't have an agent that understands all of this and knows all of this, your house could be sitting on the market in vain.
Yeah. It just becomes a stale listing, and it's in the 20% off category at Walmart.
Yes.
Yeah. You don't want that. All right. Got anything else?
That's it.
All right. Let's wrap it up, guys. If you like this video, go ahead and hit that subscribe button. Let us know what you think. Leave a comment below. Hey, other agents around, if you're watching this, drop a comment below. Let us know about your local market data. What's going on in your market? We told you ours. Let's see what you guys got. And who knows? We might have one of you on as a recurring guest here in the future as we're looking to expand. Go ahead and, again, like it, subscribe, and thanks for watching. See you soon.